Hello everyone, welcome to BISP Solutions. My name is Payal Makijani, and today we're going to learn more about enterprise planning and budgeting cloud services. In our today's webinar, we're going to discuss about trend-based planning. With the previous webinars, we learned about how do we create our application, how do we configure our application, and how do we upload the metadata in our application for the planning purposes. And planning we do in three categories. First is direct data input, second is driver based planning, and third is trend based planning. So to understand trend based planning better, you must learn about driver based planning. So let's recap about driver based planning. The goal of driver-based planning is to focus business plans on most critical factors that drive success. It uses financial models to run different scenarios based on these drivers, allowing finance and the business to understand the impact on projected business results. It further connects individual business processes, tactics, and strategies to different set of financial results and outcomes. For example, driver-based planning can be useful in long-range strategic planning processes where finance needs to project long-term trends for revenues and cost. Key business drivers will also vary based on industry to industry and companies to companies, right? So we learned in the previous webinar, we learned about what driver based planning is, how driver based planning works, what are the benefits of driver based planning, and I told you about how we plan according to drivers in our own application, in our own cloud, right? So today I'm gonna recap the whole driver based planning, and with that I will incorporate trend based example for the trend based planning as well, so it would be easier for you to connect well, right? So let's move on to our application, EPBCS application. This is our home screen. When we were discussing about driver based planning in the yesterday's webinar, we had a case where we were working with a company named eWealth, and it had earnings from four services, that was audit and assurance, consulting, financial advisory, and risk advisory, where audit and assurance and consult, each of the income had different drivers, and we incorporated that into our application. So now let's take a different example for today. Let's go with the revenue. It's the financial data of the same entity named eBilt, who again gives the consultancy service in the industry. And what are its expenses? Some of their expenses are operating expenses, staff cost, finance cost, depreciation and amortization, and other operating expenses. Here I have given the drivers for the finance cost, where the drivers are total borrowings of the entity, which is shown to be 50 lakh rupees, and the interest charge per annum, that is 9%. All right, so the finance cost for the year would be 4,50,000 rupees. Similarly, I have here given the drivers for the depreciation and amortization expense, where our driver would be WDV of asset and depreciation rate per annum. Here I have given the WDV for the asset named plant and machinery, building and software, and given the depreciation rate as per Companies Act um, of each of the category of asset, that is 15% for plant and machinery, 10% for building, and 40% for software. And with all the calculation, our depreciation arrives to be 3,95,000 per annum, right? So this we're gonna incorporate in our own EPBCS application. So let's move on further. This is our home application, and to create all the drivers I showed you here, we will click on to application, and then we will configure. On the very right hand side of the strategic modeling click onto the drop down menu where you will click onto financials, and such kind of page shall appear. Here you have planning and forecast operations, revenue accounts, expense accounts, balance sheet accounts, cash flow account, and so on. In the yesterday's webinar, we learned about revenue accounts. So we worked in revenue accounts. Here I would be working with expense account and balance sheet account. So let's move on to our expense account. Our first expense would be finance cost. So here I have made finance cost and total expenses. Here I created the expense name finance cost, which would be and its drivers in. I created a new category named expense drivers, where I created an interest charge total borrowings for the drivers, right? So again I created WDV of asset in close. In a WDV of asset would come in balance sheet accounts. In balance sheet accounts we have if if you have ever seen the schedule 3 of companies act, you know balance sheet contains asset and liabilities. Here in asset it's a non-current asset. So in non-current asset I have created WDV of plant and machinery, WDV of building, and WDV of software, and so on. I have created all the necessary drivers and necessary expense and necessary asset for all my workings in the similar manner. Save and close, right? Next step would be to import our historical data. Now, to import our historical data, we would first create a CSV file. Here's the CSV file which I have created, where I have given all the necessary drivers, that is plant and machinery rate, building rate, software rate, finance cost, interest charge, total borrowings, WDV of plant and machinery, WDV of building, WDV of software. These are all the drivers which I have already created in my own application, and I have given all the rate accordingly, and all the WDV amount, so that my my application has all the data. All right, this is the CSV file, and then we will upload the same into our application by clicking on to application overview, actions, import data, click on to create, choose file, historical data, expenses, validate, import, and close. Now we could go on the job and see if our data has been imported successfully. Here you can see our data has been imported. Then just refresh the database, actions, refresh database, refresh, create, and then refresh database. This would ensure smooth process of application and the data in our application. Finish, close, and close. Now click on to the navigator, and under the tools click on to variables. As I told you earlier, you have to define variables and user variables to filter, because it acts as a filter in our form into which we are uploading our data, right? So we have to define all the variables of each of the dimensions. Here save, and after giving user variable for each of the dimension, click on to user preferences, and you will you will usually come on to the general um, page, and in the very left hand side under preferences you have so many options right here where you have general, sorry, display, notification, ad hoc options, user variables. So click on to user variables. Here you have to define all the members you are working with each of the dimensions by clicking on to the member selector. Define each of the member with the same. Save. Okay, so after creating so till now what we have done, we have created our drivers, we have set we have imported our historical data, we have set the variables and the user variables. Now for us to see all the drivers in our expense data form, first you need to go into dimensions, application, sorry, create, under create and manage, dimensions. All the drivers you have created will be visible under OFS expense planning, under predefined expense account. And now you have one more, um, you will have one more member named expense, OFS expense driver for forms. Here you have to create all the drivers as a shared member, which I have already created as finance cost shared, interest charges shared, total borrowing shared, WDV of plant and machinery shared, WDV of building share. Here I will tell you how we create a shared member. First we'll suppose I haven't created WDV of software yet, so I will explain how do we do that. WDV of software name should be exactly same how we created the member before, and data storage type shared. The moment you will click on to share, the warning shall appear which tells you that the properties will be overridden with the base members properties on choosing shared data storage. Click on to OK and save. Here you will create a shared member. The moment you create a shared member, uh, refresh database, and you will get this member into the form where we gonna actually plan our data. Right, finish. Now click on to navigator, expense, choose all your working the version, currency, expense drivers, scenario, expense account. Here you are working with product, market, etc. Choose your POVs, and then this is the step where you are not dealing with historical data. This is the step where you're planning for the month, quarter, or the year you want to plan for, right? Suppose here I am planning for the financial year 2024. So here I have to give trend. Now what is a trend? Let's move on with the trend part. So what is trend? For that you need to first learn what is trend based planning. For that you should understand what is trend analysis. Trend analysis is a technique used in technical analysis that attempts to predict future stock prices movement basis on recently observed trend data. Trend analysis uses historical data such as price movements and trade volume to forecast the long-term direction of market sentiments. Trend analysis tries to predict a trend, such as a bull market run, and then ride that trend until data suggests a trend reversal, such as a bull to bear market. Right? Trend analysis is based on the idea that what has happened in the past gives traders an idea of what will happen in the future. Trend analysis focuses on three typical time horizons: short, intermediate, and long term. So there are three type of trend: upward trend, downward trend, and sideways trend. If I talk about upward trend, it is also known as bull market trend. It is a sustained period of rising prices of a particular security or market. Here it is referring to a security or market, but it can also apply to different drivers, as it would be in our application. So, upward trends are generally seen as signs of economic strength and can be driven by factors such as strong demand, rising profit, and favorable economic condition. Similarly, when we talk about downward trend, a downward trend, also known as bear market, is sustained period of falling prices in a particular security or market. Downward trends are generally seen as a sign of economic weakness and can be driven by factors such as weak demand, declining profits, and unfavorable economic condition. Let's talk about sideways trend, it also known as range bound market. It's a period of relatively stable prices in a particular security or market. Sideways trend can be characterized by a lack of clear direction, with prices fluctuating within a relatively narrow range. So, how trend planning works? First, we have to identify the market or the driver or the product you want to analyze. Then, gather the data, the historical data, the current data, and the futuristic data you will be working with. Gather all the data and then organize the data in a way that makes it easy to analyze. This could involve creating spreadsheets, chart, or graph to visualize the data. Then analyze the data. To use your chosen method of analyzing to identify trends in the data. This could involve looking for patterns in the data, calculating statistical measures such as average or standard deviation, or using graphical tools such as chart to identify trends. Then interpret the result, use the result in your planning decision. This is how trend based planning works. And now let's move on to our cloud and learn about how do we do trend based analysis in our own application. So here we can see all the drivers we created, right? We created finance cost, interest charges, total borrowings, plan, building software. So, and again, we have we have to define a trend. Here we have so many trends. Let me show you. We have current year actual average, current period actual, whole forecast to current year plan, prior year actual average, prior year actual with seasonality, forecast average, etc. So current year actual average means calculate the average for an account for the current fiscal year specified in planning and forecast for preparation. So here I am choosing current year actual average. Maybe for total borrowings I would choose different trend. It could be whole forecast to current year plan. This all trend will give different answer for each of the trend. And here again in this third column you can define the percentage increase or decrease in trend you are uh, forecasting in the coming year. It could be 10% increase or it could be 20% decrease in the coming year. Define as per your knowledge of the future period, right? Here I could say, suppose total borrowings would increase by 10%. Save. And this would show you how much we can expect our total borrowings would be in the coming year. See, when I was working with मैम, मेरा सिस्टम बंद हो गया एकदम से। तो मेरी मीटिंग तो एंड हो गई, ये शायद लाइव ही हूँ मैं अभी तक। बोल, कंप्लीट करूँ मैं? करके देखूँ हो जाए तो। Sorry for the interruptions. Let's continue. So as were we working with total work total borrowings, and I set my trend to current year actual average, and I give the trend that 10% increment in total borrowings I expect in financial year 2024. So it showed me how much total borrowings I can expect, that is 55 lakh approximate borrowings I can expect in next year, right? So this is how planning work, this is how trend based planning we do, how we can give a trend to each of our drivers. We can uh, give a increment or a decreasing trend, and different type of trend, and then we can see how we can expect our organization to move forward in next financial year, or next month or next quarter, as per your own planning needs. So this was it for the trend based analysis. So this was it for the trend based analysis, and you can you can try it with different drivers, and if any doubt comes forward, you can always contact BISP Solutions. Thank you for your cooperation, and see you next time.